I'm going to show you how I sold out of everything last week and managed to take my account from nearly flat on the year to a 27% gain in only, I don't know, 6 trading days. How does that sound? If that sounds good to you, you're in the right place. So let's get started with the OVTLYR Nine. Now, I want to show you the OVTLYR Nine, because it's the most important trading metric that I think has ever been created in the history of time. I'm a little partial because I basically created this out of thin air, but if you can put all of this together in the OVTLYR Nine, this is going to give you the Slingshot setup. Okay. Remember, all of your market moves or all of your moves in a stock is 40% due to the market, then 30% due to the sector, and 30% due to the stock, and 100% due to the fact that I need to highlight my cursor. There we go. Now, when you're looking at the market, you want to look at the trend, the outlier buy signal or sell signal, and then the breadth. Now, breadth actually has been such a huge determining factor for us in the last couple of weeks. Now, what is breadth measuring? Breadth is measuring how many stocks are on the bull list with buy signals versus on the bear list with sell signals. And looking at this right now, what we see is 106 buy signals today versus 172 sell signals today. Now, on its own, what does that mean, right? We got some buy signals, we got some sell signals here. But if we look at the details, what is this telling us here? We zoom in, and the green line is measuring how many stocks out of 100% are on the buy list, on the bull list. And the red line is the 10-period moving average of this. Now, I'm very proud of myself. I'm very proud of this because I actually created this. This is an indicator that is 100% my brainchild. I basically built it in Excel for Mahesh. Mahesh took it and put it on the website, and I'm very, very proud of it. But what I'm most proud about it is that it is such a leading indicator, you have no idea. I'm not even joking. You have no idea how powerful this market breadth indicator is. Now, we can see it actually crossed under today, and it's been getting really close the last few days, And as of today, it went under. And what happened today? The SPY is down nearly 2%. Crazy. I'm telling you, this market breadth indicator is the most leading indicator I've ever come across in my entire life, and it's not even close. Why would it be a leading indicator? Well, let's conceptualize this. If we're looking at the bull list right here, this is showing us a number of buy signals that are coming through. If there's more buy signals coming through, more people are excited about buying stocks. If more people are excited about buying stocks, it's pushing up the price, right? More people buying stocks pushes up the price, which means more people are buying stocks, which pushes up the price. It's a trend, right? When the trend is moving up, that's what we want to see. More and more buy signals pushing up the market. But when it peaks and comes back down, that's when things get a little hairy. So here on this January 31st crossover, let's look at this. January 31st was right here, right? It let us know ahead of time something wasn't right. Now, of course, during this time, you could think, well, that's stupid. It doesn't matter. Nothing is really happening. Chris's market breadth indicator is so dumb. It's going to continue to rise forever. And then holy moly, what just happened? And then hang on to your britches. A 10% down move. Okay, now hold tight. Before we get excited about that, that was January 31st. And then it crossed back up on March 17th. March 17th is right here. March 17th is this candle right here. What happened? It went up. March 17th, it went up. And on March 27th, it peaked and went back down. Looking at the price of the market, the 17th, let's put on here the 27th. There. So the market breadth told you things were moving down. The market breadth told you things were moving up. The market breadth once again told you things were moving down. Isn't this cool? And then, let's see. It kind of kissed it right there, but then it continued down. On April 11th, it crossed back up. Here. April 11th, it crossed back up. It crossed back down for 1 day, so I really wouldn't count that. This is what I'm looking for right here, May 19th. Well, today. And then today, it's crossed back down. So once again, market breadth is leading the charge. And it makes so much sense. Conceptualize this. If more people are screaming that they want to buy a stock, that's going to help push the market up, right? This is what's happening. If more people are screaming, I want to sell the stock, it's going to push the price down. This is what's happening. And I am telling you, by having that as part of the OVTLYR Nine, right? By having this at the top of the OVTLYR Nine, this will tell you which direction the market's going. Now, if you choose to ignore that, you do so at your own risk. The rally didn't start, the rally sharded. I like that. I like that. Now, that's the market, okay? That's the first part of the Slingshot setup, the trend, the signal, and the breadth. So the trend, if we look at the SPY right now, we can see the signal still on a buy, and we'll zoom in here. The SPY is not full stocks. That's a great question. So OVTLYR covers about 2,600 stocks. And so I use the full stocks here because I want to get a full perspective of everything. You can actually zoom in on just the S&P 500, just the Dow, and all the individual sectors here. Like we'll go to financials because we'll look at Robinhood in just a minute. So looking back over here, we can see the trend of the market is bullish with the 10 over the 20, price over the 50. That is the OVTLYR trend template right there. And that's why it's green. We got a buy signal and a bullish trend template. So now we see out of here, green, green, and the last one's going to be red. Right now, whenever you're looking at stocks, this is how you have to evaluate them. Of course, you're going to have OVTLYR to do this because you cannot get the market breadth. It is impossible to get the market breadth without OVTLYR because it measures how many buy signals are an outlier. So you can use whatever metric you want for breadth, but it will not be this unless you have OVTLYR. Next, the sector. So we're going to look at the financial sector. Let's go to Hood over here. Hood got a sell signal today, in fact, but I took this buy signal right here and it was 10 over 20, price over 50. But let's focus in on the sector real quick. The sector was getting more greedy, right? This right here, this measurement shows you how fearful or greedy the sector is. Okay. So for the sector, it was getting more and more greedy, which is what you want to see. And then sector breadth was still bullish, although bullish and weakening, and just crossed under today. So looking at these two, right, this has changed in the last couple of days on the financials. So we'll go ahead and mark fear and greed. Well, actually, we'll mark breadth red first, and then we'll mark the fear and greed as green because it was still increasing. Okay, we can see the fear and greed in the sector is increasing. The breadth has peaked under. Next, the last 30% of the stock's move is due to the stock itself, right? So with the trend, we've got a bullish trend, easy peasy, 1020 over 50. We'll mark that green. The signal just got a sell signal today, so we'll mark that as red. The fear and greed, is it continuing to rise or has it peaked? Now, when I bought the stock, it was rising. And then it peaked at 83. So if you look over here and then look at, you move your cursor over here, look at that value. It says it was at 83 when it peaked, 83.42, then 83.17, 82.58, 81.69. When the fear and greed peaks and then starts to contract, that is a sell signal to me. And it's not, oh, you know what? I think it's going to go down. No. I have this written in stone. If the OVTLYR heat map stalls, meaning it has not a higher value or a lower value, that is a exit signal. I will make sure that I exit no matter what. So that got me out. Now, if we look at the chart on Hood, you can see where I got in and you can see where I got out. I made 96% on my options in just 3 days. It was, at the moment, when I got out, it was the top. It went up a little bit higher from that point here, but we certainly have a sell signal right now. So if you're holding Robinhood, you may not be in the best place. Okay, let's continue on. Fear and greed of the stock, we know is going down. That is bearish. And then any outlier blocks in the way. Nope, no outlier blocks in the way. So we'll make that green. So we just, if I didn't talk so much, within 90 seconds, 75 seconds, something like that, figured out how to save time, make money, and start winning with less risk. It's not just a phrase. I can show you in a moment's notice how to save time because I showed you exactly what to look for. Nearly everything is on 2 screens. I showed you how to make money right here. When I made 96% gain, receipts are on YouTube if you want to see how I did it. 96% gain in 3 days. And I showed you how to start winning, like we just did, with less risk. But if you're still holding on to the stock, now you have elevated risk. If you're still holding on to Hood, when you have bearish breadth in the stock, or in the market, bearish breadth in the sector, bearish fear and greed, and a sell signal, what are you doing? Right? The OVTLYR Nine has 9 pieces. It's 9 itty bitty baby steps in these 3 sections here: the market, the sector, and the stock. Now, applying this allowed me to grow my account by 27% in 6 trading days. 27% in 6 trading days. Flat. I completely missed the downside here. And I saw all the YouTube comments about how Chris never even trades. He just talks shit about everybody else. And then as the market starts coming back, what do? Receipts are on YouTube. We made hella money. We made life-changing money to this. So here's the deal. I want you to be able to do this. I don't want to just sit here and show my returns. I want to hear from you how you are using this, right? I want to hear how you are taking the OVTLYR Nine and applying this to your trading and how it's changing everything for you. Because you and I both know that that is the truth. If you don't already have OVTLYR, what are you waiting for? First off, this is not supposed to be a sales pitch, but it really is in a way, because if you don't have OVTLYR, you don't have access to this information. If you don't have access to this information, you are not trading with everything you possibly could. All right, so let me introduce myself real quick, and I want to hear from you. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already, because on Tuesdays and Thursdays, do you know what happens? We go to university. We go to OVTLYR U.
Are you ready? Let's go!
Respect is earned. Respect is never given.
Here's the deal. Every Tuesday and every Thursday, we are doing OVTLYR University. And I'm going to teach you literally everything that I know about how to trade. So don't miss out on that. Do not miss out on that. So what I want to do is I want to go over into our Discord and I want to answer some questions. I saw a lot of questions coming through on the Discord. And so I want to do that. What I'd like you to do is I would like you to put in the chat how you're using OVTLYR and how I can help you out, right? What are some questions that you may have? But I for right now, what I'd really like to do is focus in on how OVTLYR is helping you. That's what I'd like to know. That's what I'd like to know. So first question is coming from Alan. I have a question about SMCI. I opened an options trade the day after yours and bought it slightly cheaper. My half ATR is at 42.22, which is still above, but can see that the fear is increasing and the market breadth is falling. What do I do? Hold on because I haven't hit my ATR, or sell because? Okay, so first off, Alan, I'm never going to tell you what to do. Never. It may feel like I'm going to tell you what to do, but I'm not going to tell you what to do because I, number one, only want you to only make your plan. It sounds like you don't have your exit strategies lined up yet. I think what the best thing to do would be go to cash and figure out what your exit strategy is going to be. So the next time this happens, you'll know exactly what you're going to do. All right. Now, for me, if I saw the fear was increasing and I saw that the market breadth is falling, those are 2 of my exit signals. Those are 2 of my exit signals. My objective is to get out with as much profit as I possibly can. But if the fear and greed is falling, if market breadth and the sector breadth are both falling, those are exit signals to me. And there's no possible way I would hold this. So that's up to you. But Alan, the real key here is, dude, it doesn't sound like you had an exit plan at all. And you really need to, for sure, no matter what. Stocky Locky says, OVTLYR's helping me to minimize risk with strategic precision, along with Chris's guidance and reading the Steve Burns books has helped me massively. Oh, awesome. Rick says, OVTLYR is awesome. Saved me so much money to get in and get out in a timely manner. Fantastic. Stocky Locky says, surgical precision. Very, very cool. Another question here from the Hammer Donkey, which is such a fun username. Okay. If you have a minute in today's live stream, can you give me some insight on DG, so Dollar General, against your exit strategy? So I did not take the Dollar General trade yesterday. I'll show you why. I'll show you why in just a moment. I don't think it's triggered any exit signals, but just looking for confirmation. I'm willing to stay the course of my plan, which I've adopted your plan and slapped my name onto it. That's fine. That's fine. You can use my rules, but I always say, figure out what your rules are, because I'm in a losing situation here. If I tell you to do one thing and it does the opposite, if I tell you to sell and it goes up, you're going to say, Chris is an idiot. He doesn't know what he's talking about. If I tell you to hold it and it goes down, you're going to say, Chris is an idiot. He doesn't know what he's talking about. I'm in a losing situation no matter what, which is why I tell you guys to create your own plans. I just want an extra set of eyes to be sure I'm not accidentally causing child neglect / abuse with my itty bitty baby brains of mine. Very funny. Very, 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 very funny. Okay. Let's look at Dollar General, and I'll show you why I didn't take the trade. I really thought I would. But when I was going through the OVTLYR Nine, something stuck out to me. And I even put it here in the Discord yesterday. I said, I might nibble on the DG calls. Oh, I was thinking of XEL. That's the one I was thinking of that I didn't take because the fear and greed had stalled on that sector. Speaking of, let's go to XEL and see what happened. Okay. Well, certainly within an order block right here. So I would not have traded it within an order block. You would have had to close over. So yeah, that's why you don't trade into order blocks for sure. Okay. So let's go to DG. I'll be very honest with you. At this point, I don't remember. I just know I was so slammed with that yesterday. I didn't take a look at it. The buy signal came through on May 19th. So today's the 21st. The stock itself has a bullish overlay, a bullish trend, buy signal, and getting more greedy. The sector getting more greedy. The sector breadth going up. So really, the only problem here is market breadth has crossed down. Right. So if we go back to our OVTLYR 9 evaluation here, this are actually all green. The only issue here is the market breadth. The market breadth is not conducive today. The market breadth is actually saying, you know, I don't think anything else is going to happen. So for Dollar General, let's look on the chart. I mean, it's looking beautiful. That's what you want to see. You want to see it closing above order blocks. You want to see it pushing higher. These moves pushing up higher is exactly what you want. So to me, I didn't trade it because it didn't fit my plan. But for you, it absolutely can. So I'll push this back on you, my friend. The Hammer Donkey. I'll push this back on you. Know where your exit plan is going to be before you get into the trade at all. David says, I'm finding it easier to break one of my rules when I encounter something that requires me to adapt and change the rule moving forward. Still learning. David, that's actually great, right? All of my rule sets came from something happening that was not already in my rule set and be like, ooh, I probably should account for that. There's a new rule. That's okay, right? And you don't notice when those things are happening until you have money in the market and you're like, ooh, yikes, okay. That's something that probably has happened a million times, but I never paid attention to it until it actually affected my bottom line. And then you pay a lot of attention to it. A lot of attention to it. Let's go to this one. David says, just close qubits for a 20% profit. Outstanding. You're welcome. You're welcome. Outstanding work there. Hang on. So JJ, I saw this earlier. I'm not going to lie. Kind of irritated me. JJ, I don't know if you're watching live, but this irritated me just a hot minute. Okay. I'm going to explain why this irritated me. So I put this post out and I said, did anyone notice how the market breadth peaked and is now market breadth peaked and we're now seeing a sell-off? Weird. Outliers had this data before everyone, right? We've talked about the market breadth many times. We've talked about the market breadth over and over and over and how important it is. But it's just not fast enough for everybody, right? Just not fast enough for JJ. So JJ, why this irritated me was, bro, we gave you heads up for weeks. Legitimately, how many days did we give you heads up? Right? When it goes up and then contracts and starts pulling back in, that's your hold or exit signal, right? And that started happening as far back as May 13th. As far back as May 13th, we were having some red flags show up right here. Bro, that was a week ago. A week ago. Right? I don't know how much further ahead of it I could get than a week ago. Okay? We're doing our very best here. Just pay attention. I got you. Let's see here. Stu Vamp. You've mentioned a half ATR as a stop loss, and I also heard a 2 ATR as a stop loss to give the stock room to move around better. Can you give some advice on this? Cool, no problem. So with a half ATR as a stop loss, right? Let's just put one on here real quick, just for funsies. Bullish ATR levels. Hold on. All right. So this would be the opening price. If we were to take this trade right now, this would be half an ATR from this point, and then we'll put on 2 ATR below. Okay, so the current ATR value is 3.08. So 3.08 times 2 minus 101.20 is 95.04. Look how far I have to drag this. 95.04. 95.04. Like way, way, way down here. Okay. You really want to take that much risk to find out if your trade's going to work? Right? Where Chris is getting out right here because it's not working. You want to be okay with getting out way down here? Bro, no way. No way. I think this is the thing that I want to show. Yes. I mean, look at the risk to return here. Right? Imagine you're only going to get, a few bucks out of it, but you're willing to risk from 101 to 95. That is a huge amount of risk, a tremendous amount of risk. Could you do that? Sure, go for it. But you need to trade a lot smaller. You need to trade a lot smaller. In fact, you would need to trade 4 times smaller than I would. In fact, let's do this as an exercise. Let's do this as an exercise. Okay, let's say that we're looking at Dollar General. Okay. And we'll do the math on here, and it should make sense real quick why you would never want to do 2 ATRs. So Dollar General here. Okay. So if we had $25,000 account with a 5% risk, that would mean we take 197 shares or two option contracts. But let's say rather than a half ATR down, we went down 2 ATRs. Okay. So what we need to do here, if I delete this, I think that's going to work like I wanted. Yeah. So we'll do equals this times 2. Actually, that times 4. So why did I do that times 4? Because this is taking a half ATR to go down, and I want to make sure that it goes down the equivalent of 2 ATRs down. So if you are to trade the same size, and the only thing that you are trading, I need to make sure that I put that back. That's why I did that. If I want to trade the 2 ATR exit point here, rather than getting out at 99.50, I'd be getting at 97.45 or 94.75. So my share size would be 1/4, 50 shares versus 200 shares, right? 50 shares versus 200 shares, because I'm going to find out this quickly. We're all going to find out this quickly if a trade is going to work or not. The difference is I'm going to be in there with a giant size. And if it works, I'm going to let it go. In order to have the same amount of risk, you would have to trade a size 4 times or 1/4 the size of mine. 1/4 the size of mine. And you're going to let it go that far against you to find out if it's going to work. Giant difference here in amount of risk. Because you're still going to have the same amount of risk, right? At the end of the day, we still have the same amount of risk, but I'm trading 4 times as big as you because when I'm right, I'm going to make 4 times as much money as you. But if I'm wrong, we're still taking the same amount of risk. Okay, I hope that was helpful. Very cool. I have fixed that, put it back. So, my objective with this is to make sure that I'm helping you out in every way possible, right? And I want you to continue to tell me your success stories here in the chat and over in the Discord, because that is exactly what I am here to help you with, right? That's exactly my job, is to help you make money, to help you save time, make money, and start winning with less risk. That's my job right there. So the way that you can, the way that you can pay me back is by telling everyone you know about OVTLYR. Because the first rule of OVTLYR, you should tell everybody you know. So real quick, what is OVTLYR and how does it work? Old Uncle Warren used to say, be fearful when others are greedy, greedy when others are fearful. OVTLYR shows you if investors are acting irrationally fearful or greedy, and by how much, allowing you to get into the stock before the OVTLYR move happens. So if you're ready to save time, make money, and start winning with less risk, it's just 3 simple steps. Head over to OVTLYR.com, grab the annual pass for just 82 cents a day, or if you're on the annual or on the monthly pass, do a 1-click upgrade right here. Start using the OVTLYR 9, which I've shown you exactly how to use the OVTLYR 9, so there's no excuse. For when you get into OVTLYR, you know exactly what to look for on all your stocks. And number 3, sit back and relax, because you just found the easiest way to save time, make money, and start winning with less risk together, which I've totally botched that. Sit back and relax, because you just found the easiest way to save time, make money, and start winning with less risk. Now, my style of trading is called the golden ticket trading strategy, and it's with the market telling us what's happening. So let's go through this real quick, and then I want to look at a couple of stocks that you want to look at. So OVTLYR is not good, and it does not have all the stocks. Unfortunately, my friend, you have earned yourself a permanent lifetime ban. Yes. Thank you so much for that. Goodbye forever. What is the market telling us? Now, why did I do that? Honestly, the real reason is that this guy's been bugging us for a hot minute. We've seen him a million times. I don't know why he trash talks us. We cover 2,600 stocks, and if that's not good enough for you, trade one of the 2,600 stocks, okay? Pick a different stock. Exactly, Brian. Yeah, pick a different stock. Okay? I am giving you everything I possibly can on a silver platter, and people still complain. Go jump off a bridge. Not literally, but get lost. Anyway, we're going to let the market tell us which direction it's going. So we do that with the 10 over the 20, price over the 50 on the market. So if we go to the SPY, yeah, he just got a cease and desist. He just got a cease and desist. There we go. If we look at this on the SPY, we can see that the, well, that's not the SPY. Let's go to the SPY. How dare I not make you 200% by yesterday? I know. Goodbye. All right, we look at the SPY. We can see the trend is moving in our direction. The 10s over the 20, prices over the 50, right? We can see that right here. There's hands down, no doubt about it. It is a bullish trend right now. Next, we want to look at market breadth. Market breadth has peaked. Hands down, for sure, market breadth has peaked and is pulling in, right? It is pulling in. We're not gonna say that this is bullish at all. No way. And then if we look at the SPY signal, that'll be the trend, the signal, and the breadth, right? The market, the OVTLYR 9 is the master key with extra steps. So market breadth is bearish. The signal is bullish. The trend is bullish right now. So we really don't have to go any further, because for me, this unlocks the master key. The SPY signal, the market trend, the market breadth. These components up here. And then you add in the sector breadths. So I don't have to do any more to know that I'm not going to be trading anything, because the Slingshot setup is not there. However, I will for sure look at some of your stocks. King Arthur says, obviously he hasn't used the OVTLYR 9. Obviously. All right, so let's look at some of your stocks. Let's look at some of your stocks. Put them in the chat. I want to look at some of your stocks. AEM Long. Ranjith, first one I saw. AEM Long. So let's do this together. AEM. AEM long. Ranjith, you only get one. You only get one, Ranjith. Okay, AEM long. We got some issues on this one. First, this has a bearish trend right here. Your 10s over the 20, prices under the 50. We'll double check today's prices here, but a bearish trend has developed. Has a sell signal. That's not so great. The fear and greed getting really weak on this one, right? The fear and greed is getting a lot less greedy, a lot more fearful. Then looking up here in the materials sector, the materials sector itself is actually increasing on its greed, whereas the fear is coming into town on AEM. I don't know why, but that's what's going on here, right? We can see the difference in the sector versus the stock itself. And then we look on the breadth, and this is crossed bearish as well. So AEM does not look like a beautiful stock to me. Let's go to the chart here. It peaked up today. Peaked up today. Your 10 still under the 20. Price is now over the 50. So even though the outlier data, it updates overnight. So even though this has picked up right now, yeah, this is not one that I'd want to own. Ranjith, if you're profitable in this trade, it may be a great time to take those profits. It might be a great time to take those profits. In fact, today is a Cicad day. Yes. Sit in cash and don't F up, right? Sit in cash and don't F up. If I don't have the signals I need to go in, then there's nothing to do. Nothing to do. Let me see. Bender says, I got no stocks. Master keys locked up. Cicad few. Yes. Cicad few. We got to come up with a better name than that. David had a question. When you sold your calls last week, what was your profit on the risk portion or the controlled share? Okay. Great question. So I wanted to also cover this one from Danny. Could you walk us through deep in the money roll that you would approve of? I wanted to do a combo answer. I actually prepared this earlier. On Palantir. So let's go look at Palantir today. We'll run the OVTLYR 9 on Palantir, and then I'll talk about rolling it, why I did it, what I did with it, and give you a decent example that hopefully you can take home and you can recite to the wife. Because she looks pretty beautiful, by the way. Congratulations, Danny. Okay, looking at this, when I got the buy signal here, it was moving up, 10 over 20, price over 50. The fear and greed was also moving up. That's what we want to see. The fear and greed for the sector moving up, and the breadth at that time was moving up. We can see the breadth has peaked and is coming back down. We can see the sector fear and greed has peaked and has actually come back down a little bit right here. And the stocks fear and greed has peaked and is coming back down. And we got a sell signal. So there's no way I'd hold Palantir today. Not a chance. Not a hot chance whatsoever. And Chris managed to get out on the exact. Did I get out the exact peak? One candle off the peak. Not too shabby. Not too shabby. Receipts are on YouTube if you don't believe me. Not too shabby at all. I want to get this circle out of my way, though. Hang on. Work, damn it. Why does this not work? Is it like painted on there? There we go. Jeepers creepers. Okay. So got in on May 12th, Monday last week. Got out Friday last week. Now, I got out because it hit one of my exit signals. I didn't have an expectation on the trade. I had no idea where I was going to get out, but I got out because I had an exit signal. In the meantime, this giant candle right here allowed me to... Joe, what in the wide world of sports are you doing? Joe? Yeah, I saw that, Joe. One of our OVTLYR students decided to pop in this live stream right here. How dare you? How dare you? Just joking, Joe. Okay, looking at this, we can see this popped up right here, and I rolled my options. So I wrote this down to make it simple. I bought, oh dang, I didn't get my strikes. Hold tight. What did I buy first? Palantir 1207, no, 1170. Hold tight. I bought the 108s. Is that right? And then I rolled it up to the 122s. Yes, okay. So when I originally got in the trade, I bought the 108 calls. I bought the 108 strike calls, and it cost me $11.70. And then it went up quite a bit. So I rolled my position from the 108 strike to the 122 strike. And then I still owned the 122 strike when I sold out right here. Okay, so let's go through the trade right here. So I originally paid $1170. So it's like I went to Costco and I spent $1,170 on speakers. Okay, then the stock moved up bigly, right? The stock moved up bigly, and I was able to roll. When I roll from one to the other, hold tight, trading options grid. There we go. When I roll from one to the other, come on. There we go. When I roll from one to the other, from the 108 to the 122, I'm still keeping the trade alive. I'm still keeping the trade alive going from here to here. I'm still holding a position from here to here. Okay. Now, by doing so, it is a completely new trade, but in the process, hold tight. I want to find my slide so you can, here. I took partial profits off the table. I took partial profits of $1,207 per contract. It freed up capital so I could continue to trade with that brand new capital I just took in, and it keeps the trade alive. So it's like I bought the option contract here, and it's like I bought speakers at Costco. Then a few days later, when the price went up, I decided to return those speakers to Costco, and Costco's like, okay, cool. You can keep the speakers, but now here's a refund for $1,207. Right? Hey, wait a minute. I bought them for $1,170 and you're giving me a refund for $1,207? Yeah. And you can keep the speakers. Wow, what amazing customer service. What amazing customer service. And so at that point, I had locked in a profit of 37 cents, right? I had locked in a 3% profit that could not be taken away from me no matter what whatsoever. Now, that's not the goal here. The goal here was to eliminate all risk. I could not lose on this trade. Take that, Tom Nash. I could not lose on this trade. So I'm still holding it at 37 cents. And then I sold to close for, was it 1065? It was 830. It was 830. So my return was 74% because I was still holding on to this one that I closed for 830. Plus I'd already taken 37 cents of credit in. So this was my total profit on the trade. And you divide that by how much the original trade cost. So to David's question, I'm dividing on how much I paid for it. That was a 74% return on Palantir. Right? 74% on Palantir. Pretty sick, right? Crazy awesome, right? I want to answer those two questions. VacLab had a question. Yesterday's university, you did not go through possible trades. No trade will be today. Can you go through yesterday as if it was something or not? I did that earlier. So no, dude, with the contraction of market breadth, not going to take it. Sean, do you play around with a position sizing chart from time to time? Or are you pretty strict about it? You said you went in bigly on Datadog. Did you mean you took more options? Dude, whatever the position sizing pops out as is what I take, right? And for me, right, Datadog, if you had $25,000 in your account and you wanted to risk 5%, let's do Datadog, would get you how many contracts? 2. Okay. But let's just say that you went in with, I don't know, let's throw some round numbers around. Let's say 100,000. I actually like to use 7%. 7% is my wheelhouse. That's way more than I would tell anybody else. That's because I am very confident in my plan and it pays off bigly. So for example, in this case, if my account was 100,000, I'd be buying 11 contracts. Now, for some people, that'd be like, no way. That's nothing, right? But that is a tremendous amount of risk. A tremendous amount of risk. 11 contracts here. That's 7% on 100,000, right? Let's say you had 500,000, right? That'd be 58 contracts. It's all about controlling the risk here. That's what I was trying to get at. So play with that, figure out what works for you, Sean. And your numbers are going to be different than mine. No doubt about it. Manny says, when doing options 80 delta, and there's a wide spread between the bid and the ask, save $1.30, does it mean there's a liquidity problem? Not necessarily that there's a problem. The problem comes from trying to get out, right? Trying to get out. How much do I have to give up to get out? because let's see if we can find one, a decent one like that. Actually, here we go. The 106 strike on Palantir June 6th is $1.30 wide. Meaning, if I bought it at 17.10, and it's not quite $1.30, but we'll go with it. If I bought it at 17.10, and then I had to sell it back at 16.25, that's 85 cents on the spread. 85 cents on 17.10 is 5%. So I have to give up 5% just for the privilege of buying it and selling it back. That sucks. So it's not that there's a problem per se. It's that I want to try and minimize that bid-ask spread because I got to pay for it, right? That's going to cost me money out of my pocket. No, thank you. No, thank you, sir. Let me go back to the chat here. I like seeing the chat on the screen. I like this is handy. Is there an educational part that teaches you options and how to? So you're going to love this, Wild Stimpy Norwood. Wednesday mornings, I'm going to start doing options deep dives. I started, today was the first one. So every Wednesday morning, we're going to be doing that. The replay of that will be, actually the replay of that will be right after this. So go watch that video. That's the first of this. I want to make sure that I teach you as much as I possibly can. I'm already doing the OVTLYR University. Now I'm adding in the options deep dive. I'm trying to tell you guys, I'm giving you everything. I am giving you everything on a silver platter. I'm giving you the tools. I'm giving you the software. I'm giving you the know-how. I'm giving you the stories. I'm giving you the anecdotes. I'm giving you everything you could possibly need to save time, make money, and start winning with less risk. And some of you are going to make buttloads of money. And some of you are going to complain that I didn't make you enough. But I'm going to give you everything that I possibly can. Okay? Everything that I possibly can. Let's see. We have enough Davids in OVTLYR to have our own convention. Michael Ross, Chris, when you have a perfect setup on a stock but no open interest, would you ever just buy the stock and manage it the same way? So first, I don't ever buy the stock on its own. I only want the options because I can get so much more leverage on the options. So to tell you the truth, honestly, no, I would just skip it. But that's me and that's my own style personally. By all means, Michael, that could be perfect for you. Could be perfect. Yeah, the roll that I rolled up on Palantir is now out of the money. Who would have thought? And at that time, it was deeply in the money. Yeah, Joe, I saw that. Okay. Thanks, random guy. My only complaint is YouTube didn't send me this sooner. Absolutely. Absolutely. I agree with you. Phil says 99.99%. Appreciate your giving. Awesome. This is what I do. This is my jam. This is what I absolutely love to do. And if this isn't working for you, there's a million other YouTube channels that'll show you how to lose money. But if you're ready to save time, make money, and start winning with less risk, click one of these two videos, and I'll see you soon.